At the end of the day, y'all, it's going to be an amazing, amazing market. But the people that might have a tough time in this market are the ones who aren't willing or able to adjust their model, who aren't able and willing to be more creative with some of your deals, who aren't able and willing to really crack through and show how credible are you in the market for a house seller to be working with or a buyer to be buying from. Make sure that you're really focusing on credibility a lot more in this next phase. So as you're closing deals, I know in the past you'd probably experience where it's like, well, shoot, I don't need to get testimonials because that's not a pain point for me right now. I'm still closing deals. But this next phase, you're really going to need to be doing what I've been talking about for years. Y'all, I've been talking about this for years. I'm on the road right now heading to Boston for the week. And so it's early morning. And driving to Eugene, Oregon, where I actually usually fly out of. And it's about an hour away from Roseburg. So up and early this morning, about 4 a.m. And on the road right now, 5:20 a.m. right now, almost to Eugene to catch my flight. So if any of you ever come to Carrot Camp, Roseburg isn't the easiest place in the world to get to, but it's amazing when you get here. Okay, so crazy pumped about the next round of Carrot Campers coming in. Some amazing investors already signed up. If you're interested, go to carrotcamp.com, and I would love to work with you. Let me read this text message that I got from a client of ours. Okay, so I'm going to go find it in my text thread right here. And let me read this text message I got from Daniel DiGiacomo. And the reason this is so important is because Daniel is an experienced investor. He has a very successful company. And I reached out to him just before the last Carrot Camp. I said, man, Carrot Camp is going to change the game for you. And I think a lot of experienced investors probably look at it and go, how is this going to do that? How is it if I go to small town Roseburg, Oregon, hang out with the Carrot crew and other top level investors? How's that going to do it for me? So let me read this text message I got from Daniel. Okay, he says, hey Trevor, the summit has been amazing. The summit was basically our market leader summit. I'm going to be recapping the biggest takeaways from that on this episode. But he said, good stuff. David and I will be at Carrot Camp in September-ish again, if you'll have us. Since the last Carrot Camp, I've hired 11 people, and my wholesaling has gone from 60 to 100 deals really quick. I was already doing a decent business, but now my team does 90% of it, and I'm focused on expanding. I've committed to buying 30 plus units each and every month. Again, each and every month in 2019. Again, thank you. That right there is what we're looking for with Carrot Camp, y'all. That right there is what we're looking for. We're looking to not just make it a good time for you, not just get you outside and then surround you around amazing high-level people. Our aim is to completely change the paradigm by which you operate your business, to give you that true path to freedom, flexibility, growing those finances, making the impact. So if you're interested in coming to Carrot Camp, there are qualifications. Just go to carrotcamp.com. We're going to start marketing Carrot Camp pretty hard in February to close out the remainder of the seats. There's not too many seats left, just a handful of seats left. So go to carrotcamp.com. So the time I'm recording this right now, it's the week after an event that we put together called the Market Leaders Summit. And the Market Leaders Summit was an idea that we had back, the last part of last year, where we said, hey, usually Trevor hops on the phone with some of our biggest clients each year just to kind of pick their brains. Where's the market going? What needs, what needs are we not solving of yours? What can we solve? Things like that. And this go around, I said, what if I actually did the same thing, but just broadcast it? What if I actually grabbed these people, got them on a Zoom call, and broadcast these conversations so anyone could listen to them completely for free? And the reason that I did that is because the market this year is kind of shifting more than the market has shifted in the past 2, 3, 4, 5 years. Okay, so if we were to recap really quick, high-level economics, the real estate market makes some sort of a move usually every 8 to 10 years. It's about an 8 to 10 year cycle. And of course, the last time that the market took a big dive, it was 2007, 2008. That puts us right there at the 10-year mark, even stretching the 10 years, going on to 11 years. And at the last Carrot Camp, we had some investors that were working in really high-end condos up in New Jersey, Petra Pusta, and crushing it, pulling multiple seven figures in profits per year. And he came to us, and one of the problems that he had was he needed to kind of diversify his income stream because his previous deals where they were really high-end condos, they were renovating these condos, $1 million plus, he said we were selling those like hotcakes before, but then it was just almost an immediate turn at the beginning of 2018 where they couldn't sell them anymore. They're having to slash the prices of these high-end condos in New Jersey by $100, $150, $50,000 a pop. And usually when a market starts to make some adjustments, it's usually at the high end, and it amplifies it at the high-end condo side of it. Okay, so high-end condos, vacation homes, things like that. And so we're always looking for trends like that, because any trends that you see at the high end and the condo side of it or vacation home side of it, then it usually starts to trickle back through the rest of the economy slowly. Sometimes quick, but sometimes slowly. But a lot of the conversations we had kind of wrapped the economy and wrapped the real estate market into this nutshell. That no one's seeing a crash. Okay, no one's seeing an impending crash like there was in the last downturn. And I was reading a book by a guy named Ray Dalio. Ray Dalio owns Bridgewater Associates, I think that's the name of it, and it's the largest hedge fund in the United States. Okay, might be the largest in the world, but for sure the largest in the United States. And one of the things that Ray Dalio wrote about in his last book was he really wrote about all of the different economic, busts, basically. All the different economic busts dating back as far as this data was recorded. What were the patterns that happened? I think he broke down about 50 to 60 different big economic events, all the way from the Great Depression and the financial crisis of the mid-'80s, and of course this last go around, the one in 2007, 2008. And usually those economic busts, the big events, come every 2 to 3 cycles. And so if a cycle runs 8 to 10 years on the real estate side, these stock market cycles are very, very similar as far as the time span. So you're talking every 20 to 24, maybe max 30 years, there's going to be a big event. And so if we go back in history and you look at this, you go, okay, 2007, 2008 was an event. And then there was another one at the end of the 90s. So there's the 1999 kind of the tech bubble. The tech bubble burst around there. Okay, so that was about a decade. All right. And then if you go back again about another cycle or two, the mid 80s was a crash. And let's now go back again. There was a pretty big one in the 70s. But then if you keep on going back further, it's going to track it all the way back, right? So no one is going to predict a big pullback. But what people are predicting and already seeing is more of a normalization, more of a slowdown of the growth. And I was talking with RJ Bates and Cassie DeHaas out of Dallas, and trying to kind of find out their synopsis on the market. And very, very similar to what other people, they were saying basically the market's still really, really good. They said it's probably not going to be growing at 8, 9, 10, 20% a year that it was in some markets here, in some pockets of the market the last 4 or 5 years. But they said it's probably going to be a nice 3-4% per year in their market anyway. And how they're seeing that really come to play is before they were able to sell properties for their asking price within that first 2 weeks. Okay, they'd have multiple above asking price offers, and they'd sell it pretty darn quick within that first couple of weeks. Now what they're looking at is it might take about a month to sell some of these properties. And what some other people are saying as well is to really stand out in this market where there's a little bit more inventory popping up, interest rates have ticked up a little bit, impacting some of the retail buyer side of things. Which really, of course, is a good thing for those rental buyers. So right now is a great time to be diving in, building that cash buyer list, really be finding those buyers. And when we look at the usage of Carrot, the number 2 type of lead that comes through the Carrot platform are cash buyers. And actually, we hear it all the time at masterminds and through messages I get through Facebook and everything, where people say the cash buyer system within Carrot works insanely well. Some people say, and I can't say this is the case for everybody, but some people say I turned it on and I started posting properties and I started posting the Content Pro blog post, the automated blogging system, and they said they started getting buyer leads, sometimes multiples a day, which is really, really cool. So build up that darn buyers list, because the more people that you can find who are looking to buy rentals, the more people that you're looking to find who are still in the flip game and still buying flips. You're going to need to get tighter with your numbers, but those markets, I think, are going to be insanely healthy still moving forward. On the real estate agent side, what are you looking at there? Same thing, time on market we're seeing is going to be increasing a little bit. Some markets we're still going to see some price appreciation, listen to some smart economists at Freddie Mac and some other spots. They're still seeing forecasts in many parts of the country where housing prices are still going to be ticking up, and also housing sales numbers are still going to be ticking up over the next 2 years. And you might ask, why is that? If we're overdue on the top end of this market, why is it that we're still likely going to see in many parts of the country a little bit more price appreciation? Have we hit the top yet? And I think in some markets we have hit the top. There's some reports going on in Seattle where pockets of Seattle have already seen pricing pullbacks up to 10 to 20% in some parts of Seattle. Now, is that indicative of the whole market? No, but there are pockets of Seattle where 2 years ago, these property, or these parts of the country were really, they were selling insanely fast. Once again, there were a dozen above asking price offers. Market was overheated, and now people are having to pull back, and time on market's longer. They're having to pull back the pricing to get them sold. And not only that, but a lot of the house flippers also are saying that it's not just that it's taking longer to sell, that's part of it, but then how do you ensure that you are standing out in this market where there's more options for buyers now? Well, now you can't potentially just put lipstick on a pig and throw it out there because there's no other options for buyers. Now, house flippers, anyone else out there that's looking to sell a home is having to kind of look at the detail a little bit more on that house. Okay, look at the finishes a little bit more on that house, because you've got more competition. More people are looking at more properties now because there's more properties in the market, which means your house has to be a little bit tighter to try to get that price you're looking for, or to sell as quick as you're looking to sell. Okay, so at the end of the day, y'all, this is a really, really good market ahead. It's a normalization. It looks like it's something where we just have to tighten up our ship a little bit. Jason Medley with the Collective Genius, he owns the Collective Genius, the largest mastermind in the real estate investor space. Just go to carrot.com/CG, carrot.com/CG. And it's for high-end investors. And he was basically saying, you got to tighten up your ship in your business, because in the last 4 to 5 years, especially for house flippers, you've been able to make mistakes, just like people are making on the flipping TV shows all day long, where they think it's going to cost them $30,000 in renovation, it ends up costing $50,000, but because housing prices still appreciated a lot, they ended up still being able to make money, or they made more money than they projected, because the housing prices appreciated during that extra 2 months that it took to get the property done. So those types of things, you're going to see a lot less forgiveness in this market. A lot of those mistakes that you may be making or other flippers are making, you're not going to be able to make too many more times in this market and sustain. So how do you make sure that you get your construction costs in check? How do you make sure that you get your estimates, including if you're a wholesaler, in check? One of the big things I always hear about wholesalers is, in general, y'all underestimate fix-up costs, especially now that you can't just once again put lipstick on a pig. In order to sell the property, the finishes have to be better. Okay, so now if you're estimating $20,000 in this project, because that's what it took to sell it and still make really good money 2 years ago, you're probably going to need to up those repair expenses to reflect the current state of the market. And then next is make sure you add on a little bit more holding costs into your deals to ensure if it does take a little bit longer to sell, that's the case, that you're fine. And then last, once again, you've got to make sure that you're really looking at the net profit in your business at the end of the day. I think a lot of wholesalers and investors get stuck on the gross profit. They get stuck on the gross revenue that they're pulling in, and that's all amazing. But I was talking with a really high-end investor just this last year. He's been in the business 6-7 years, out of Miami. Really successful investor, has a decently big team. It's a multiple 7-figure a year business. And I said, how's your business going, man? And he said, the business is great, but the problem is our margins have really compressed. So if you really dissect why his margins have compressed, there's a couple reasons. One of them is housing appreciation has slowed down in that market. So as they were able to lock down a property, and the property was worth more in 30 or 60 days than it was when they locked it down, that's going to stop being the case as far as having the appreciation be such a big part of adding to their bottom line like it has in the past. Next is whatever mistakes they were making on the fix and flip side, they're kind of getting caught by those mistakes now, right? So anything that took longer to renovate, and now they're not getting covered by the appreciation. Now that's something that's not reflecting on the bottom line positively. Also, people costs. Okay, so if you're building your team, often what happens when people are really growing their real estate companies is they then start to hire a team, which is amazing. You should be doing that. We had an entire day 2 of the summit was focused on how do you build systems and scale your team correctly. And so a lot of people hire their team, but then they don't catch up the systems and process to make sure that their team is running efficiently. So they have a very, very inefficient workforce coupled on top of a real estate market that isn't appreciating as much as it was in the past 2 to 3 years. And then you amplify that with construction costs increasing in some spots of the market. Talking with Doug Faith and Daniil Klayman, 2 guys who do a lot of development in Philadelphia and Richmond, Virginia, they said that their construction costs are going up as well. So they're always having to budget in a percentage of construction cost increase, especially if the project isn't starting for multiple months. So at the end of the day, y'all, it's going to be an amazing, amazing market. But the people that might have a tough time in this market are the ones who aren't willing or able to adjust their model, who aren't able and willing to be more creative with some of your deals, who aren't able and willing to really crack through and show how credible are you in the market for a house seller to be working with or a buyer to be buying from. Make sure that you're really focusing on credibility a lot more in this next phase. So as you're closing deals, I know in the past you'd probably experience where it's like, well, shoot, I don't need to get testimonials because that's not a pain point for me right now. I'm still closing deals. But this next phase, you're really going to need to be doing what I've been talking about for years. Y'all, I've been talking about this for years. You're going to need to be really focusing in on building that credibility profile. Okay, go back, way back in the archives. I did a whole episode on building your credibility profile. What's your credibility score? That episode is called. We'll link it up in the show notes. But what's your credibility score? That's going to be crazy, crazy, crazy important this next cycle, because once again, the buyers are going to be a lot more picky on who they're buying from, because they want to make sure that the person that's bringing those deals to them knows how to work the numbers, and the person that might be selling those properties knows how to do a renovation. The sellers, of course, are going to be a lot more picky because there's a lot more options. As you see Open Door and OfferPad, and even let's drop this, y'all, Keller Williams. Okay, Keller Williams and Coldwell Banker both announced in 2018 that they piloted what's called iBuyer programs. iBuyer is essentially just the fancy speak that mainstream America places on companies that directly buy properties. It's called an iBuyer is what they say. And so Keller Williams and Coldwell Banker both tested iBuyer programs this year. I'm going to do a whole episode breaking down this topic here coming up in the coming weeks, why I think it's actually a good thing, why it's not something you should be afraid of, also why you shouldn't and couldn't really copy their websites or copy their model unless you make fundamental changes. But basically, there's a lot more competition coming on the market right now, right? So not only are there more people wanting to be real estate investors and more people wanting to be real estate agents because the real estate market is good, and so when that happens, you get a flood of people wanting to dive into the market to be a part of it. But also, you have these other technology and kind of like just mainstream companies that are getting into the iBuyer side of things. Okay, they're skirting around a real estate agent, they're skirting around a real estate investor and directly buying properties. Now you might be asking, why is Keller Williams, why is Coldwell Banker doing this? And we haven't heard any indication whether they're going to scale it out right now. We did hear indication, and we read reports that it was a positive pilot for both companies. Both companies took a little bit different approach too. Coldwell Banker actually partnered with a company that their parent company owns, that basically is making these offers on properties. It's a rent-to-own or lease option company where they're a big national company that does lease options all around the country. So they're going in, they're able to make a really aggressive offer. They're not offering 60, 65, 70, 75%. They're usually offering 95%. Okay, they're offering a really, really aggressive price. Now, the reason they can do that is they're offering 95% on these properties because they're going to then go put a tenant buyer in there. They're going to get a down payment from a tenant buyer. They're going to increase the amount of rent that the tenant buyer has over the top of the mortgage that this company has on the property, and they're able to buy a lot of properties. Now, if you look at that model long term, is that sustainable? I think it is, as long as that company can continue to get funding and financing to back and carry all those lease option properties. Now, I think the funding usually comes as long as they're able to show the risk is low, and as long as they're able to show that the returns, the internal rate of return is consistent and solid. And usually that happens in the early stages of a model like this, but then what happens later is they then take on this capital, this investment capital that they need to go out there and invest in buying properties and lease optioning them out. And then eventually they might lose, or they might run into instances where the available inventory that they have to purchase starts to run down, but they still need to deploy this capital to get returns for their investors. So what happens when that scenario happens is then they start getting more aggressive with their offers. So they start offering 96%, 97%, 98%. And that's when we see companies like that get in trouble. You're seeing some of that happen with opendoor.com right now. And who knows what's going to happen with opendoor.com's model. If you look at the economics of it, I think a lot of people agree that the economics of opendoor.com's model don't look too good in the short term, but it is smart money behind it. So we'll see what happens, y'all. They have a lot of properties in the market that are 60 days, 90 days, 180 days out because they bought wrong. The market stopped appreciating as much as they thought, and they're not able to sell these properties for what they're looking. They're taking losses on them, okay? So that's going to be an interesting one to track right there. But how is it that's a good thing? I'm going to be diving in deeper in another podcast, but here's the short of it. Right now, real estate investors are kind of, they're selling directly to an investor is a very uncommon thing to do in the whole scheme of the house selling, the house selling market, right? I don't know what the percentage is, but it's a very, very small percentage of overall home sales happen to a direct buyer. It's usually through a real estate agent. It's usually through the market, something like that, right? So if you look at that, and you look at the different options that an average home seller has, it's usually kind of just real estate agent, for sale by owner, or I don't know, like, right? A lot of people don't really know. The ones who do the research and they figure out that there is this whole other option of selling your house directly, then it's kind of like a fringe option. It's not one that has a lot of credibility yet. It's not one that a lot of people trust yet. It's not mainstream. It's still a fringe option. So when they bring up that option to their attorney, they bring up the option to their spouse or their family member, what ends up happening is oftentimes they get a lot of pushback because there isn't the education. They've heard those things about house flippers that they just bottom dollar you, and so then there's all of that stigma that comes with selling a property directly. On the other hand, almost everybody knows 7, 8, 9, 10 real estate agents. Almost everybody knows, 7, 8, 9, 10 agents. So if that's the mainstream that's built up over the last 50, 60, 70 years, that's what people are thinking about when they're looking at selling. But when you see a Coldwell Banker, when you see Keller Williams, when you see these big Silicon Valley venture-backed companies get into direct house buying, it makes it more mainstream. It makes it to where it's an option that's a lot more attractive for the average person because now these other companies are doing all the marketing for you to educate them on the market. They're doing all the marketing for you to educate them on the option of selling your house directly. Okay, so that makes your option a lot more palatable, and that's where credibility is going to come in massively. All like, you guys are probably wondering, why does Trevor keep on hitting credibility? Why does Trevor keep on hitting credibility so big over the last 2 to 3 years when you've probably been able to skate by without having to really focus on building your credibility profile and brand out lately? It's because of that. Okay, it's because as markets get more competitive and heat up, and as these other companies get into the market and they offer different but similar solutions, you have to stand out on why you are the one that people should work with. And it's not just about how long you've invested. That's such a massive limiting belief that so many investors have that they say, well, how am I going to beat someone who's been doing it for 10 years? I've only been doing it for 2 months. Okay, well, how am I going to beat someone who has a bunch of testimonials? I haven't done a deal yet. You have to start somewhere, right? You've got to start somewhere. All of those successful investors started with 0 deals, every single one of them. There's not one successful investor that was born with a deal in the bank. Every single one of them were just like you. Now, how did they crack through and build that credibility? They did it by becoming an expert. They did it by studying their market. They did it by going down there and getting to know the person at the assessor's office and understanding how the assessor's office works and understanding where to find the right data. And they did it by really working with mentors and learning other things about what are the strategies to help sellers in different situations. How do I get creative on finding multiple ways to close these deals? And if you're a wholesaler, if you're a flipper, and everything has to look like a wholesaler or a flip, and everything's got to fit in this box, this small box, otherwise you won't do the deal. And if you're a wholesaler or flipper and and you're not doing deals creatively, okay, and everything's got to be, hey, it's got to be 65%, or it's got to be 75%, otherwise I'm not going to do the deal. What's going to happen is guys like Carrot client Tang Nguyen or down in Dallas, they're going to wipe the floor with you because that guy knows how to do deals creatively. He did over 100 deals last year. We had him on the Carrot Cast. Go listen to that episode of the Carrot Cast with Tang Nguyen, Tangwynn, and his business partners, where they crushed it last year doing over 100 deals. And he said the majority of their deals, came from other wholesalers not being able to close deals because other wholesalers are using this formula where it's 65%, 70%, 75%, whatever it is. And it's got to look at this exact way. If it doesn't have enough equity, then shoot, I can't offer my 75% of my 65%. And therefore it's not a deal. I pass up, I go to the next one. So all that money you just spent to get that lead, all that Google pay-per-click, all that time doing SEO, all that money for direct mail or cold calling, all that money you spent to get that lead you threw away. And so they're hitting up Tang and saying, hey man, I saw that you're really creative with deals. You know how to do subject to deals. You know how to do owner carry. You know how to put these things together. Can you look at this? And he's turning all these quote unquote dead leads into deals that are netting tens and tens of thousands of dollars. And this isn't the biggie here. Netting the money is awesome. The thing that's the coolest is now all of those sellers that are struggling and have a situation they can't get out of, now you're able to help them out. Right now, if you're not coming up with creative ways to do these deals, you're actually harming your sellers. You're wasting their time. You're harming your sellers by not coming up with and finding out and educating yourself on how to do these deals more creatively. Okay, so I would really suggest everyone go out and look at owner finance. I would really suggest everyone go out and start to study how do you put together a subject to deal, what types of leads are subject to, or prime for subject to. Okay, so go study how to do creative real estate right now, because those people that are able to put those deals together are going to be ones that stand out in a big way this next cycle. Okay, because while everyone else is looking at everything in a box and they're throwing their leads away, we saw this happen even years ago, where as the market shifted a little bit, more competition came in. We had some investors who were really successful the previous 2 to 3 years wholesaling. You know, they made 6 figures just with Carrot with SEO. And then 2 years later, they're out of business. You ask, how does that happen? Their lead flow didn't change. They still had predictable, consistent momentum building lead flow. They still had all their search engine rankings. They still had all the leads coming in. Why did they go out of business? Why did they say we can't turn these things into deals now and go out of business? They did it because they tried to look at everything in the same box. Everything still had to look like a wholesale deal. Everything still had to look exactly like it has to go 65%, you know, ARV, whatever it is. Okay, everything had to look in that, had to fit in that tight box. While their competitors were going, okay, the market's moving, there's more competition, which means I need to increase the amount that I'm going to offer a little bit. And it also means we might need to put a little bit of fix-up costs and do a wholesale here, right? So while they're looking at everything in a fix and flip, and that's how they're analyzing their numbers, maybe a wholesale is the way that they should be doing it. So rather than netting $5,000 on this deal, what if they netted $20,000 by doing a wholesale? And that's what a lot of people in the Market Leaders Summit we're talking about, is a lot of them are doing wholesale right now. They've been doing a wholesale the last year and a half. They're going to continue to do that because, y'all, if you're trying to take the easy way out and you're always looking at everything with one box, everything's got to be a wholesale. I'm gonna get rid of it. I'm not going to wholesale anything. I'm not going to hold anything. It's got to be 65%. those are going to be the people who are going to be struggling next 2 to 3 years. Okay, so make sure that you're studying wholesale. Make sure you're studying how to put together a subject to deal. Make sure you're studying what owner finance is and how to do owner finance deals. Make sure you're building your buyers list, and there might be different buyers in this market coming up than you've been having in the past. Okay, maybe your current buyers are really crunching their prices down, but maybe you can find buyers who've had money sitting on the sidelines as housing prices have been appreciating. Maybe they're waiting for things to go on sale again so they can pick up some more rental properties, right? So keep on networking, keep on building that buyers list. Go out there and keep on educating yourself. I don't care if you did $2 last year or $2 million last year. If you're not educating yourself on how you can adjust to this market and really not just survive but thrive, y'all, I think these next 2 to 3 years are going to be some of the biggest wealth building years for many of you out there listening to the Carrotcast. If you're willing and able to adjust, if you're willing and able to learn more, if you're willing and able to focus on becoming a legit investor, a legit person who's out there solving problems, adjusting the ways you're doing things, raising private money and potentially taking down some of these deals and buying some of these deals, okay? There's going to be so much opportunity for you out there. So much. So I'm going to wrap up this episode here. Recap the Market Leaders Summit here in the next couple of minutes. We're sitting right around 30 minutes in this episode. But hopefully you've got some specific actionable things that you can take into 2019. Hopefully you've got some specific actionable things that you can really take and grow your business with. And that's what we're talking about here is I want to see you grow your business. I want to see you increase your profits. I want to see you help more people. I want to see real estate investors out there really go more mainstream and become the logical way that people sell a house. Okay, I want to see real estate agents start to toe the line more and collaborate more with investors. Okay, so real estate agents might be going, oh my gosh, if Keller Williams and Coldwell Banker start offering, as they're delivering a listing agreement, they're going to start offering to purchase homes as well. How am I going to compete as a real estate agent if they're bringing both sides of the deal? Well, you can do the same thing by collaborating with real estate investors or becoming one for yourself. I highly suggest real estate agents start seeking out people that have those signs on the street, bandit signs, right? You need to be seeking those people out, call them up and learn about them. Because unless they're a brand new person, just read the book and they're trying to wholesale or flip houses right now, you're going to learn from them. You're going to get a lot of value from them. Okay, and even if they are brand new, they're good people to get to know and show that you're investor friendly, because those people need resources and people to send deals to as well. So what if they get a lead and they're not an agent and they don't know how to deal with it? They could be sending that lead to you that looks like it's a retail lead. So make sure y'all are collaborating. On the other side of it, investors, I hear a lot of people say, real estate agents, I don't even deal with them. They're just not investor friendly. They don't get it. You're talking to the wrong ones. Okay, if you're stopping at 1, 2, 3, 4, 10 agents and you haven't dove deeper, you're talking to the wrong ones. Oftentimes the most successful agents that I know, not all of them, but the most successful agents I know, also keenly understand how the investment side of it works, or they are investors themselves. So if you're a real estate investor, start networking the crap out of real estate agents, okay? Learn about what they're doing. See how you can add value to them. See if there's a way that you guys can collaborate on deals or send them leads and see if they can send you leads. Because as they're coming across listings and they're having listing appointments, maybe someone's house needs a lot of repairs, but that person doesn't have the money and they're not willing to make the repairs. And the agent's sitting there going, well, I can't do anything with this. I can't show it. There's no way I can sell it, right? That's where they need to call you up. You need to become the trusted source for your local real estate agents. And real estate agents, you need to be the trusted source that also understands you're not burying your head in the sand about there are other options out there. You're not the only rodeo in town. And there's so many real estate agents that are honestly just extremely in the dark about what the real options are for sellers. A lot of real estate agents think that selling to a real estate investor isn't legal. A lot of them are thinking that it's not something that is a legit solution. They downplay it. And if you're doing that, you're not going to be winning in the next 2 to 5 years, because I'm going to wrap it all with this, y'all. I'm going to wrap it all with this. You might be asking, how can Trevor say that? It's because of this right here. The reason Keller Williams and Coldwell Banker and Open Door and Zillow, all those are getting into the home buying business, is because they fundamentally see that there's an inefficient market right now. An inefficient market meaning someone is stuck in the middle that doesn't need to be. Okay? Technology is changing, y'all. It's easier for a buyer to go out there and look at properties with the technology there is without a real estate agent. The only problem is real estate agents are legally stuck in the middle oftentimes because the seller didn't know that they had an option, so they went ahead and listed with an agent instead of doing something else, right? But what happens when the seller realizes that they don't have to list it with an agent? They can sell it directly to Zillow, and then Zillow's already got all the buyers in their database, and they can directly show all the buyers these properties without an agent sticking in the middle. And rather than taking 6% of the deal, they're taking 1%, but they're doing it on scale because they're a massive company, right? What happens when Keller Williams, what happens when the seller realizes that they can get a hold of one source, which is Keller Williams, if they decide to roll out their iBuyer program, and they can sell directly? Why would they get a hold of any other real estate agent unless it was their Aunt Betty and they really didn't want her Aunt Betty's feelings? But why would they get a hold of another real estate agent if they knew that Keller Williams isn't going to just come and list the house, but they're also going to make me an offer? It's because the market is converging. Okay, the market's inefficient. Inefficiencies usually get rooted out. We saw that in the 80s with stockbrokers and things like that, and then all the deregulation that happened after that. Okay, inefficient markets get rooted out. And right now, because a lot of real estate agents are making money simply because they have a license and simply because that's been the way it's been done for decades, and they're kind of stuck in the middle, I think investors and agents are going to be one. I think in 10 or 15 years, investors and agents are going to be one. It's going to be a solution for getting rid of my house that I need to sell. And then within this one solution, here's a couple of options. Because you as investors and agents, you're not fundamentally solving different problems. You're solving the same problem. You have a house seller who needs to sell their house. And now the only difference there is, what is their situation? If they're more motivated, if they're in more distress and they have to sell quickly, currently real estate investors have been filling that gap. If you are willing to wait, then people are willing to go, okay, I'll put up with listing with an agent right now because I'm willing to wait a little bit longer. It's worth it for me to wait 30 days, 60 days in order to get the few extra bucks I'm looking to get. Okay, so inefficient markets usually get rooted out. I don't want that to happen to you. I don't believe it's going to happen to you. But if you don't start networking with agents or become one if you're an investor, and if you don't start networking with investors or become one if you're an agent, then you're probably going to be one of the ones that gets squeezed out in the next decade. All right, so I'm pumped about the future for y'all. I'm pumped about how we're going to be helping you through this. One of the biggest things that we keep on seeing in the trends, once again, is you've got to be online. Online is the only marketing vehicle. The only marketing vehicle that keeps on gaining momentum, that keeps on gaining ROI, and that keeps on getting better. Okay, if you look at direct mail, you look at cold calling, you look at all those, they're amazing, amazing sources. They're amazing. You should keep on using them. But those are ebb and flow, cyclic types of marketing. If you were to look back a decade ago, no one wanted to do cold calling 7, 8, 9 years ago. Okay, no one wanted to do it. The ones who were doing it were doing really good, but they were being really quiet about it. If you were to look 3, 4, or 5 years ago, direct mail was a jam that everyone was using. Okay, that's what everyone was using. But then as everyone started using direct mail and direct mail became saturated, your response rate started to go down. Direct mail is still amazing. We had Christina Kraus on the Carrot Cast to walk through how they're crushing it with direct mail still, okay? But they've had to adjust the way that they're doing it. You can't send out the same normal stuff, okay? But basically, those are cyclical ebb and flow types of marketing, okay? It's as a lot of people send these pieces out or use them. Can you imagine if every billboard in town had a We Buy Houses thing on it? Billboards all of a sudden would become a lot less effective, right? Because everybody in town has a billboard that says We Buy Houses on it. So that's what's happening with direct mail. Cold calling, that's been what's been picking up the last couple of years with cold calling. And you're going to see the same thing happen with cold calling over the next 12 to 24 months. As cold calling is going to become less and less effective. And so people are already shifting a lot of their outbound energy over to RVMs, okay? Ringless voicemails. So ringless voicemail, why is it working? Because no one's doing it. Because you're able to drop a voicemail on someone's phone, on their voicemail box, and basically the phone doesn't ring. It drops a voicemail on the box. Max Maxwell and Bo Hollis both talk about this in detail on their episode of their Market Leader Summit session as well. And so RVMs are becoming popular. Why are RVMs becoming popular? Because no one's using them once again. Okay, it's not being used a lot. So now, what I believe with RVMs is going to happen is over the next, same thing, 12 to 24 months, I think we're going to see regulations hit with that technology. I actually own part of a text message and voice broadcast company called Call Loop, and Sales Message is a product within there. I really do predict that RVMs are just going to be getting abused a lot. Voice broadcasts are getting abused, and text messages are getting abused a lot by investors right now. And I just really believe that there's going to be some sort of regulation happening over the next 2 to 3 years. Now, does that mean that it's going to make it so you can't do it? No, it's just going to make it so you've got to follow a little bit more legit guidelines. Everyone out there who's hiding and obfuscating your phone numbers because you know it's a gray area, I think that's a really good indication that if you're having to do marketing or you have to obfuscate who you are in your marketing, that's the first thing I would look at, y'all, to go, am I doing business correctly? Am I doing business correctly if I have to hide who I am in my marketing? Am I doing business correctly and up? And do I feel insanely great about the marketing that I'm doing, that I would tell my grandma, I would tell anyone about the marketing that I'm doing if I have to hide it? Okay, so that's what I'm talking about being the credible source and all those. You're closing deals on that right now. You're doing it. If you don't learn how to become the credible source, if you don't learn that there's marketing that has ebbs and flows, some of it's gonna get really, really good, and you've got to get good at it while it's good. But then you always have to have online going, because online has consistently grown in effectiveness. Online has consistently brought the highest margin deals. Online has consistently built momentum and had more and more usage every year, not ebb and flow type of cyclical demand. Okay, so I'm going to wrap pulling into the airport here. A little bit longer episode than I was planning, but I hope you guys got some amazing value from this episode. Kind of a recap of the Market Leaders Summit. You can go to carrotsummit.com, and we're probably going to be doing more summits. We're probably going to do another one sometime later this year. But if you go to carrotsummit.com, enter your email address in there. If and when we decide to pull out the recordings out of the vault and offer them up again, the full 16 plus hours is 12 plus amazing investors breaking down in detail what they're doing in 2019. Just go to carrotsummit.com and check it out. We're not saying it's available now as of the time that I'm recording this, but we're looking at potentially this in the next couple months, opening it up and offering them up for a really, really affordable price. All right, carrotsummit.com. Check it out. But have an amazing rest of your week. I want to see you going out there and making people smile, amplify, and really be a beacon of positivity and possibility for those around you. And get real with this market. The market is changing, but it's not a bad thing. It's not a bad thing if you make the adjustments. I would go through and take notes on this episode, take notes on the things I told you to go out there and learn, that you're going to have to learn to adopt and adapt to in this market. Go out there and build your credibility profile, start to get testimonials with every single deal, start to do content. That's the reason we're doubling down on our content marketing systems in 2019, y'all. It's because we truly see content as being critical to winning in this next 2 to 3 to 4 years. As there's more competition with the iBuyers, as there's more competition with other investors, how is it that you stand out? You stand out by building your expertise through content, through your credibility, and you're going to win the market. I have an amazing rest of the week, and we'll talk soon.